Hello guys, welcome back to my channel. This is your boy Mr. Forex, and today we'll be trading Euro USD 1 hour time frame, and we'll be using a popular tool called moving average. So before we put the indicator on the screen, let's take a look at the markets. Let me use this cross line. See, market moves make a big move. Make a big move here. Market make a big move. Market make a big move. Okay, now you see. Okay, now let's jump into it. Let's put our strategy and see how it goes. So click on this F button here, this F icon. Now click on the plot sign. Okay, now search for moving average. Click on moving average. So click on it. Now let's set the indicator. Let's edit it our own way. So put it 200, then exponential, leave it at close, change the color to blue. Okay, so that is it. Click on done. So let's head back to the market session. Now here we are. You can see what happened here. Let's zoom it. Let's take a deep look. Let's see what happened here. I'm going to explain what happened here so you understand before entering a market. So, like I said, if you watch my previous video, you know what I call these two candlestick. These two, this red and green, this red and green, this red and green, they have a name called bullish Hereme. Bullish Hereme. Not bullish and goofy. This is bullish Hereme. Okay, what's a bullish Hereme candle? This is a candle, a long downward candle formed, followed by a bullish candle, followed by a bullish half candle. Okay, or a bullish small candle. So the market touches the moving average line, which is the blue line. So the market touches this line, okay, touches this line and close here. So another candle open again, come down, touches the line again. So what this means that bullish trend is about to occur. This means a bullish trend is about to occur. A bullish trend is about to occur. Why did I say that? Because this market touches the blue line. It not just touches the blue line. This is called the bullish Hereme. Bullish Hereme. So if you were to take a trade, let me indicate it. If you were to take a trade, okay, we take our trade, we will enter the market from this very next candle. So we take a trade here, and we stop and we put our take profit here in the previous high. We'll put our take profit here in the previous high. So let me use the arrow sign. So we'll put our take profit here. So when market hits this green line, we make, I don't like, yeah, I would like to run some calculation, but for the sake of this video, that'll be for another day. So this will be our take profit. Now let's look for another opportunity. Let's go for another opportunity. Now you see market falls down, it touches the blue line again. It touches the blue line. Look, to be honest, I won't buy here. Just because market touch blue line doesn't mean we should enter the market. Wait, so I wait for the next candle, which is this candle. This candle. This candle formed, followed by a smaller candle, followed by a red candle, which is a bearish candlestick. So these three candles, the long green, the small, the cross, and the red, this is called evening star. Evening star. And what is an evening star? An evening star candlestick indicates a bearish trend, which means a downward trend. So in that case, we put our target here. If market hit here, we'll go for a buy. Okay, if the market come downward and hit here, we'll go for a buy definitely. But look, this is what happened. A red candlestick formed again. Like I said, this red candlestick followed by a green smaller candlestick is called bullish herring. Bullish herring. So I repeat, bullish herring. So if I were you, I'll enter the market from this very next candle. I'll enter the market for this very next candle. Okay, and set my take profit above here. Then my stop loss below this line. Okay, let me draw it so you understand. Okay, my take profit, which is this green zone. My take profit. Look, don't be greedy. You don't have to be greedy. You just need a short position is okay. So it's better than losing your money. So we close here. So we won this trade. If we were to enter this trade, if I were to enter this trade, I would have won this trade back to back. Okay. Now here we go. Let's look for another opportunity. Okay. Okay, this is another opportunity. Yeah. Now you can see market went down, went down, went down, went down, went down, went down, and hit the blue line again. It hit the blue line again, then followed by a longer bullish candlestick. A longer, not a smaller, this time a longer bullish candlestick. So this red and blue and green altogether is called bullish engulfing. This is bullish engulfing. This is bullish engulfing. How do you spot a bullish engulfing? A bullish engulfing comes with a previous downward trend, which is a bearish trend, a red candlestick, followed by a longer bullish candlestick. Anytime you see these two candlesticks, look at it. Just try to picture the image. This is bullish trend. So this is bullish trend. And if you were to enter this market, honestly, I'll enter the market right from here, this next candle, then set my stop loss below the trend line, below this trend line. You can see what happened. Market falls, back test the blue line again. So this is not just a bullish engulfing anymore. This is now called double bottom, a double bottom, a double bottom pattern. Market comes down here again, it goes up, it comes down here again, it becomes a double bottom, which indicate a buy trend, a buy signal. So we draw our support layer here. Okay. Imagine we enter the market from here, from this very candle, set our stop loss below. We would have made a lot. Even if we enter the market from here, we will have still built on profit. We will have still built on big profit. So even these two candles, this red and this green, like I said, the red and the green, this is called bearish remain. Bearish remain. So don't get me wrong. So now you can see, and you can see, and you can see. Sorry, it's called bullish remain. I made a mistake. Sorry for that. My apologies. These two candle is called bullish remain, not bearish. Bullish remain. So you can still enter a market from here. Enter a market from here. Set your stop loss below the trend line here, which is this green zone. Then we'll set our take profit on the previous high of the market. This is the previous high of the market. So let me mark it with a green zone. Okay, we set our, so this will be our take profit zone. When market hits this, we make money. Even when we enter here, just one candle is enough. Just one candle, you don't have to be greedy. It's not your money, it's a free money. So if I were to enter this trade, believe me, I would have won this trade back to back. So for the sake of this video, please, if you like my video, please don't just watch and scroll away. Subscribe. Please subscribe so that anytime I drop a video, you'll be the first to be notified. So thank you very much. I appreciate. If you have any question to ask, please drop a comment down below. Thank you. Thank you very much. Bye.